that Madam Rampel-Garner will start for 6 minutes.
Thank you, Mr. Chair. I'll direct my questions to FinTech Canada. Thank you for coming here and for the work that you guys do. One of your member companies is Stripe, a payment processor, and in a series of articles this week, including one by the National Post, the long and the short of it is that Stripe has taken a posture in saying that it wouldn't pass the savings that were part of a deal reached by the government with Visa and MasterCards to lower the fee for small businesses. They wouldn't pass that along to their customers. One of the rationale on their website that they've used for this is that they said that their costs have increased, a 0.036 increase in standard pricing due to reintroduction of GST, HST taxes. If this is true, how come your other member companies that are payment processors haven't taken the same posture as Stripe?
It's a great question, and I think it's because a few things. Just because interchange fees are changing doesn't mean the overall pricing model of any given payment processor has to change. That's because the market for payment processing, especially credit cards, is fairly competitive, fairly well developed, and there's a lot of differentiation in the market. Firms don't just compete with each other on the basis of price, they also compete with each other on the basis of value added.
So can I back up just on something you said? So you said that payment processors aren't obligated to pass that savings along. Why do you think that the government didn't mandate the passing of savings along? I guess for me it seems like a bit of a shell game if these savings are supposed to be passed along to small businesses and then they're not. They're essentially just going to cover the operating costs or the profit of these payment processors. So why do you think that the government didn't elect to say this must be passed along through payment processors?
So I'd be speculating. I wasn't talking to the government about why they didn't mandate the pass-through.
Did any of your member companies take a posture to ask you to ensure that the government would not pass any savings along? Did any of your member companies say we need to make sure that the government doesn't force us to pass these savings along to our customers?
No.
Okay. Has this ever come up in any discussions with any of your member companies and any of your executive?
Occasionally we will talk about the various issues that are going on, but the debit and credit card code of conduct is not something that we've been asked to engage on, and it's not something we had a seat at the table in. Okay. We focus primarily on other issues in the financial sector, mostly payments modernization and open banking.
Thank you. Senior Liberal fundraiser, Mark Carney, he just put out a large fundraising ask for the Liberal government. He's rumored to be a leadership contender and has now been appointed to be a senior economic advisor without any sort of firewall. Have you ever had any interaction with Mr. Carney?
No.
Okay. Has he, are you aware of any advocacy that he has made on behalf of Stripe for this particular issue?
I'm not.
Okay. As far as the rest of your member companies are concerned, I would be, if I was sitting on one of their boards, I'd be concerned that this line of questioning is coming up in this committee. Do you think it's problematic that we now have a narrative that could potentially involve lobbying of a senior Liberal fundraiser and one of your member companies, and the fact that they're not passing savings along? Do you see that as potentially problematic from an ethics perspective?
I don't know how to answer the question from an ethics perspective, but I often find it unfortunate when complicated issues are simplified to a point where they can't really be understood for what they are. The thing about the market for payment processing that I think is understood by experts. I mean, the Competition Bureau recently put out a report a few years ago on innovation in the financial sector. And one of the things that report said is that the market for payment processing is quite competitive.
But would you say that it's fair to say that in some cases, particularly Stripe, the decision that the government made to, reach that deal with Visa and MasterCard to lower fees, that it's now being absorbed by payment processors like Stripe, as opposed to being realized by small business owners?
I think I understand what you're asking. I think in a lot of cases, there are some savings being passed on to merchants, but in a lot of cases, the pricing, like the overall pricing of a payment processor is not just based on the interchange fee. There are so many other things that payment processors do.
Just with the time I have left, do you think the government should have included payment processors like Stripe in their decision or in this deal that they reached with Visa and MasterCard, if the true motivation was actually to see savings be realized by small businesses?
I think the government should have invited more stakeholders to the table to talk about the implications of what they did.
That's fair. Thank you.
Thank you. And thank you for being so respectful of time, MP Rempel-Garner. So directly 6 minutes. MP Van Bynen, the floor is yours for 6 minutes.
Thank you, Mr. Chair. I also appreciate the opportunity to ask questions of the witnesses here. I had a considerable amount of time in a career as a banker for about 30 years. And so this is a topic that is of particular interest to me. My first question is to Equifax. I know that you don't provide. Recommendations, and I know that you provide simply information. Are there any ongoing or proposed regulatory changes that you believe will affect the way that credit card data is reported, and how that might impact the consumer credit scores?
Thank you for the question. One of the big areas where we're seeing some regulatory changes is around the ability for consumers in Canada to freeze or lock their credit reports so that the credit reports cannot be used for the purpose of applying for new credit accounts. And that actually started fairly recently in the province of Quebec with the passage of the Credit Assessment Agents Act. That is where we're seeing the majority of change in the regulatory environment. I'm not aware of any changes related to the data that is reported to Equifax specifically relative to credit card products.
Thank you. My next question then is for fintechs. What measures are in place to protect consumers from unfair credit card practices, and how do fintechs contribute to those protections? And the reason I'm asking that is you've made a comment earlier that competition is great, but if there's a captured market and there's more people going after that market, it might lead to diluting the criteria for credit worthiness, and what kind of impact would that have? So how do fintechs contribute to the protections that would lead to people becoming over-involved in high-cost credit?
Sure. That's a great question. So a few there. First, your question about how this stuff is overseen in Canada today and how consumers are protected today. There are a bunch of things. There's the Bank Act that has all sorts of requirements for banks, specifically the Financial Consumer Protection Framework. There's the Debit and Credit Card Code of Conduct, which has a bunch of obligations on all parties in the chain that help merchants. We have the Payment Card Network Act, and then the networks themselves have their own rules. In terms of what the effect of more entry into the system would be, perhaps I can just share a personal anecdote. My mortgage provider is a pretty big Canadian financial institution, and they very subtly tried to get me to renew my mortgage before the last rate reduction. I obviously didn't do it, but I thought, just for kicks, why don't I call some fintech lenders and just see how they're going to handle this situation. I didn't call many. I called a couple. All of them said to call back in November and December because there are going to be rate hikes. I don't think the effect of letting more entrants into the system will dilute the protections. I think right now consumers are being taken advantage of. They're being fleeced, to use the title of a book that was recently published on this. I think by allowing more entrants into the system, people will compete by taking better care of their customers and advising them in a way that helps them meet their financial financial goals rather than just pad to their pockets.
I think mortgages, of course, are secured credit and certainly have a more competitive environment. But credit cards have a tendency to attract people who it's a last resort in terms of how they get funds and money to get through the rent or for food, etc. And if there's a captured market in number of people, then the only growth is going to be the amount of exposure that you have with each customer. So I understand that fintechs are innovating in credit scoring models. And what impact does that have on the credit card access to underserved populations? That's where our concern is, at least my concern.
So a lot of fintechs don't issue credit cards today. Some have plans to. But if you hear them talk about the sorts of cards that they will eventually release, what they want to incentivize is good behavior on the part of their customers. Rather than more points for spending, maybe you get more points for paying off your balance on time. Maybe they want to give you the ability to create a single use card when you're shopping online and you don't have a history with the merchant, and you're worried that maybe that merchant is going to compromise your credit card credentials. In a lot of the discussions I've been lucky enough to listen to, I think the motivation for a lot of fintechs is to do better than what banks are doing today, because there's so much low-hanging fruit that hasn't been able to be picked because for the longest time there have been barriers to entry.
Okay. So how do fintech companies ensure compliance with Canadian regulations regarding credit card lending and other transactions?
Yeah. So it depends on what fintech vertical we're talking about. But right now, a lot of fintechs in this country are going to be regulated under something called the Retail Payment Activities Act. So any fintech company that engages in any kind of retail payment activity will have to answer to the Bank of Canada. There'll be requirements around how they safeguard end user funds. There'll be requirements on how they notify their customers of any breaches or anything like that. They'll have to meet a wide range of operational standards. The same will happen with open banking. And then some fintechs are regulated quite heavily right now at the provincial level. So, this space is not a Wild West. There is a lot of regulation. Fintechs invest a lot in compliance. And as these initiatives finally cross the finish line, I think we'll see more of that.
Okay. Do we still have some time, Mr. Chair?
You're 30 seconds over, but if you want...
Thank you.
Okay. Thank you very much. Monsieur Garon, la parole est à vous.
Merci, Monsieur le Président.
Thank you, Mr. Chairman. Thank you to our witnesses. So you'll understand that as a Quebec MP, we're in a special situation because there's a framework that's proposed by the federal government, but in Quebec, the most important financial institution is a cooperative. It's Desjardins. It's also the biggest employer in Quebec. What I understand in the situation, if I understand your market, is that very slowly, when fintechs will develop, you're going to offer a lot of services to clients with analytical tools, and the banks and the institutions like Desjardins will become like manufacturers of financial products that will be, among others, marketed by members of your association. I think that's a nice way of synthesizing the situation, of summarizing it. But in the actual situation, I think the federal government is proposing a framework for the open banking situation. But in that framework, we say to Desjardins in Quebec, either you get into the federal framework or you are left on the outside, which would be negative both for Quebec consumers and, in other words, they would be out of phase with the Quebec situation. So how do your members think about this, and how could we act so that Quebecers may have the same services that other Canadians without really constantly being directly or indirectly being in trouble with Quebec jurisdiction?
Provincially regulated entities in our membership who have raised similar questions. And, our answer to any question like that is, to the extent possible, let's not create duplicative requirements where there is an equivalent level of protection administered by a provincial regulator. Let's recognize that as equivalent, so we don't need to make these regulated entities jump through unnecessary hoops. My understanding of the open banking framework is that it is voluntary, so no one is going to force any requirements onto any entity that doesn't want to abide by them. And I know that policymakers at the Department of Finance have been in lengthy conversations with policymakers at the provincial level to work out where the requirements are net new and where they do need to be administered and where there is equivalence so they can recognize it. That said, I can't speak to any outcomes of those discussions. I just know that they're happening.
Non, je vous pose la question parce que c'est...
I'm asking the question because it's interesting how you propose it. You're saying that the actual framework proposed by the federal government is a voluntary one. So what we're saying to the Quebec institutions is that voluntarily enter into the Canadian framework or isolate themselves. And that's what's worrying us. I'm with you when you say it takes a harmonization. With these rules and these frameworks must be comparable. I agree with you on that. But what's worrying me, what's concerning in the federal framework, when you think of open banking, the personal data, for instance, Quebec is typically ahead for the protection of consumers with credit contracts, with stress tests. If you'll excuse me the terminology, we're ahead of the pack. So how, as Quebecers, could we admit that this framework, which is quite weak and not a lot of rules, could be imposed on Quebecers? And wouldn't you be in favor rather to work directly with the Quebec government so that Quebec, as it is often the case when you're protecting consumers, when you're thinking of credit contracts, could propose to the federal government a framework that's more adapted to Quebec?
When it comes to open banking in particular, where there is a requirement in Quebec that meets that sort of minimum standard or exceeds it, I think the government should recognize that and not force an institution like Desjardins to go through the extra hoops. In terms of what that standard is, we don't know yet. The second part of the legislation will be tabled later this year, so we can't speak to what the specifics of those requirements are right now.
Merci.
Thank you. I will continue with Equifax. I have a technical question for you. The Liberal government had suggested, the Prime Minister had suggested, in fact, to include the payment of the rent to owners, landlords, within the credit score. And I think the argument of the PM was that many people who pay their credit card late is they're using it for rent payments. And so this would increase their credit score. It seems quite complex to manage because contrarily to the debts that people have with banks and other credit institutions, it's a very decentralized market. So in the short term, could this be possible technically? Answer.
Thank you for that question. We were actually quite pleased to hear that this issue is getting such good attention across the country because of the fact that there are so many people in Canada who are renting their accommodation rather than owning the accommodation. And according to our numbers, there's close to 1/3 of Canadians who have a limited or non-existent credit history, which then impacts their ability to access mainstream credit products and services.
Je vais me... Sans vouloir être impoli, parce que...
I don't want to be impolite, but time is running. I know the chairman is impatient, or patient rather. I don't want to test it. But is it something that in the short term could be done within the infrastructure that is now managed by Equifax?
The reporting of rental data is already happening. Equifax has been working on that for the last few years, trying to find ways to help the underserved populations get into mainstream credit as appropriate more quickly. So yes, it certainly is possible and it's underway.
Merci beaucoup, Monsieur Garon. Monsieur Massé, la parole est à vous.
Mr. Massé, the floor is yours. Merci beaucoup.
One of the reasons I've requested this study, and I'm pleased that we're in it, is that we seem to forget the strain on Canadians and the banks, and we also seem to forget during the financial crisis it was Canadians that actually supported the banks through no fault of their own. Good examples are the $125 billion of insured mortgage pools that were to free up capital. There was banks, Bank Canada helped to implement liquidity measures. The Bank of Canada lowered the overnight interest rate, a total of $41 billion of providing liquidity support. There was a number of different resale agreements to help term loan facilities. And also because of the global market on credit, they helped with the Canadian Lenders Insurance Facility extend supports for them there. And then finally, the expansion of the facility of deposit insurance as well. So there was a series of things that took place that Canadians had to backstop the banks for. And it would seem, and my first question would be to our fintechs right here, if competition is what you're suggesting is the solution, maybe perhaps for the long term, what can we do in the short term to level the playing field here in some degree? Again, some of the loans that Canadians are getting, and you look at your mortgage rates, and I'm glad Mr. Van Bynen referenced it, but Canadians are actually putting groceries, empowering their homes, and ever essentials on their credit cards right now at 20 to 30%. And it seems horrible as a legislator here that we would allow that when mortgage rates, which are essential, are put down at lower rates. And I know the Bank of Canada is considering lowering again, but credit cards and banks are going to continue at 20 to 30% shyster loans with also different types of interest rate pyramid schemes that people have hard time to figure out. So kind of elaborate on the competition versus what we can do in the meantime, though, as I believe that there should be some regulatory improvements. And I think the Stripe example gives kind of the issue a little bit of a tension spot, is that if we don't do it right, then the real benefactor won't be the consumer or the business.
So thank you for the question. What are some things we can do in the short term? There are a few things. One, we as an association have been coming out and saying we want to be regulated more. We are supporters of the Retail Payment Activities Act. I think that happening, that regime being implemented, it's still not totally implemented yet. That will raise the bar for all payment service providers, and it'll also make it easier for payment networks to bring on these new entrants into their system so they can start competing with banks. Just to give a complete hypothetical example, I don't want this to be interpreted as like statements on behalf of the networks that they're going to do these things, because that's not what this is. But I can imagine a world where payment service providers are better regulated, maybe credit card networks get more comfortable with them issuing credit cards. Those fintech companies enter that ecosystem and all of a sudden start thinking, how can I better compete with a bank? And there are so many things they can do, ranging from the rewards to interest rates. So I think regulating the players from the get-go is important. But I also think not relenting control of these initiatives to the big banks. Payments modernization is a great example. We were supposed to build this system that would allow fintechs to offer all sorts of new payment methods to Canadians that would compete with the old ways to pay. And over the years, what that system is going to be has been totally eroded by the fact that the big five banks control the institution that is building the system. We are going to get this real-time, data-rich system that would be a bedrock of innovation. It looks like what we're going to end up getting is a duplicate of what's already in market today when it comes to peer-to-peer payments. So, saying no to the banks who want to stop progress, regulating the new players in the system, and then making progress on things like real-time payments and open banking. Those I think are the bits of low-hanging fruit because they've been done by other jurisdictions. They were done many years ago, and no jurisdiction that's implemented these things have pared it back because it's resulted in all sorts of harm for consumers. In fact, the opposite has happened. They've tried to expand the scope of these initiatives, to double down on these initiatives.
Okay, thank you very much. I'm going to move to Equifax with my time, and I appreciate that response because it's a combination of things that we can do. To Equifax, one of the things that gives me concern about the way that you're getting information is that you mentioned that there's no connection between and no reporting of the interest rate, but your interest credit score could be based on that. Now, my experience has been that if you can't get a good credit score, you're often put at a higher interest rate to be able to get that, including some of these scams, quite frankly, which I believe they are at furniture stores and other places, where they're charging 30, 40% on things. They're doing interest-free for a 0 point of time, and then later you get caught with the whole bill. Why not collect that data as well? I think, wouldn't that be relevant to a credit score? Would be the type of interest that you're being charged on, and the amount of people that have to go to a secondary borrower. It's the whole reason we even saw the rise of payday loans and so forth, was because banks wouldn't accept some of the payments or the credit of individuals and had to go to these third-tier lenders at obscene prices to take advantage of people desperate just to pay the bills.
Thank you for that question. It's a good one. One of the important concerns is that we don't cause a discrimination against Canadian consumers because of potentially past difficulties they've had financially. That's why there are a number of consumer protections in place that dictate the maximum period of time that negative information, such as a previous bankruptcy, items in collections, and so on, can remain on somebody's credit report. So I would be concerned to enable a situation where a consumer could be judged by a potential future lender based on the use of a particular lender in the past. The current credit scoring model is actually a predictive analytic of the likelihood a consumer will pay their bills on time. And that is based on the actual actions, with emphasis on the recent actions of a given consumer going into creating that ultimate outcome of the 3-digit credit score.
That, and then I'll move on real quick, and I know I'm running out of time real quick. But it would just, I guess the thing would be, it would seem to me that your data coming in would already be skewed by the fact that consumers are skewed out there by their percentages. But to be real quick, is there do you identify each payment date that's required for consumers on different credit cards? One of the things that I'm considering is a universal payment date to end some of the confusion in financial literacy, whereas there could be a universal payment date that could be made and regulated for paying any credit, like a mortgage or a credit card.
That's a very interesting concept that I haven't encountered before. So I would certainly welcome the opportunity to bounce some thoughts around what that might look like. As the system exists today, the account information is reported on a somewhat staggered basis in alignment with the statement period for each one of the credit cards, as you're aware. There's potentially a benefit to consumers in the sense that they're not having to pay all their bills at once, where many people would be getting their pay in biweekly installments, for example. So a very interesting thought, a lot to consider there.
Thank you, and thank you, Mr. Chair.
Merci beaucoup. Monsieur Perkins, la parole est à vous.
Thank you, Mr. Chair. My questions will be for the Executive Director of FinTech, the association representing, at least for the case of this study, the processors. Just so everyone who's watching is clear here, when somebody uses their credit card in a physical store, retail store, they don't know in most cases, because it's only seen to the business, somewhere between 1.5% to 3% additional charge on the total value of that credit card is charged to the business. Is that correct?
Yes, there is an amount charged to the business, and Canadians aren't aware unless they know for one reason or another. For example, some businesses might choose to surcharge.
Okay. Thank you. And included in that is a whole bunch of things, but that's set by, in this case, we're talking about Visa, MasterCard, and then there are elements of that are what are called the interchange fees, which are fees related to actual pipes, as I call it, the plumbing of the companies that actually do all that processing, and those are your members, correct?
We have some members on the acquiring side processing payments for merchants and facilitating the use of those pipes, as you described it.
So when I look down the list, I think of your members. Chase Merchant Services, they're one of your members?
They aren't a member, but we do have various very
okay, and they've agreed to the discount. The government a year and a half ago announced that there would be a 9.95%, 1% essentially reduction in those rates. It's taken us a year and a half to get to this point where 2 weeks ago they announced it. So Chase is participating. Global Payments, are they one of yours members? They're agreed. Moneris, they're one of your members? No. Square?
They're a member.
TD Merchant Services, not one of yours. Okay, so all those have agreed. Apparently, Fiserv, are they one of your members? They have not responded to any requests. Do you know what Fiserv's going to do?
I don't know what Fiserv.
How about Nuvi?
I'm not sure what they're.
Are they one of your members?
Yes.
They haven't responded. People's Trust?
They're a member.
They're one of your members. Do you know what they're going to do? No. PSP Services, Inc. PSP Services, Inc. Are they one of your members? No. Okay. So what we have here is 5 companies that have agreed, only one of which I think is yours. A number of your members who have not responded to the public announcement, meaning presumably, since they won't respond, they're not going to pass on these savings. And members, one member of yours, Stripe, which has publicly said they're not going to pass it on. So it sounds like most of your members aren't going to pass on the savings. Is that correct?
The ones who have not responded and have yet to elucidate what they're going to do, I don't know what they're going to do.
Okay, so maybe we should get them before the committee to explain why they haven't responded. So when a company, one of your members, doesn't pass the savings on, what happens to that Visa or MasterCard merchant fee? Does it go down?
So it depends on what sorts of services the merchant chooses to get. There are different pricing regimes for these kinds of payments.
But the government's making a claim here that there's going to be this massive savings for businesses and small businesses with this fee. Yet most of your members aren't willing to pass it on. So if they're not willing to actually reduce their fees, then how is the savings going to get passed on? Isn't this a fake release in the sense that most of your members aren't actually going to agree with the government, including one of the companies whose board member is the de facto finance minister of this government?
So again, I don't know what the ones who have not yet responded are going to do. But in some cases, the savings being promised might not actually come to fruition because the market for payment processing is much more complicated than an interchange fee. Just because you reduce an interchange fee doesn't mean other elements of that overall price are automatically going to fluctuate too. In some cases, some costs might go up. In a lot of cases, payment processors today compete with each other not just by reducing prices, but by offering value-added services, inventory management, stuff related to fraud detection and prevention, making it seamless, automated reconciliation. These sorts of things aren't going to be affected by an interchange fee.
So more than half, or most of your members, aren't committing to do this, yet the government claims it's actually going to reduce fees. If your members aren't going to reduce their fees, how do small business fees actually go down for credit card fees?
So the way...
If I don't subscribe to Moneris or one of these others.
The way you reduce payment fees is by introducing competition in the market for payment services, not by trying to micromanage one element of a big bundle of prices.
So the government's attempt to micromanage this one element isn't working and isn't going to work?
In some cases, it may not.
That's an incredible revelation, because we also have the CFIB claiming wildly that this is going to happen, when it appears that most of their members aren't going to see this benefit based on the fact that your members aren't willing to pass this on. And I presume MasterCard and Visa are not going to eat that savings that is required of the interchange fee just to be good people.
So I just wanted to be clear. I don't know what decisions many of the members will land on. I can't speak to whether they will or will not pass on the fees. As an association focused on public policy, we don't talk about these sorts of commercial matters.
Merci beaucoup. Monsieur Badaway, la parole est à vous.
Thank you, Mr. Chair, and thank you, Mr. Bruns, for being here today. First question, what steps are being taken to promote transparency in credit card fees and interest rates, particularly for new consumers?
On the consumer end, there is quite a fair bit of transparency. You can compare credit cards fairly easily on the websites of all the different institutions that issue the cards. When it comes to merchants, the debit and credit card code of conduct promotes a lot of the transparency and requires that payment processors notify their merchants in advance when anything is going to change related to pricing or anything else. The debit and credit card code of conduct underwent a recent update that will improve transparency even more compared to where things were at not too long ago.
And have fintechs developed any type of financial literacy products for consumers, and what steps are you taking to educate consumers about responsible borrowing and financial literacy to help them avoid predatory lenders?
So if I understand your question correctly, what sorts of products are fintech companies building to help Canadians avoid things like predatory lenders? Well, I'd say they're doing a wide range of things. The example I gave earlier, where two fintech lenders could have tried to take my business and get me to lock into a mortgage before two rate reduction announcements, they didn't do that. Instead, they said there are likely going to be announcements to reduce interest rates further. Wait and we can save you money. There are plenty of good stories about some of our members helping Canadians build their credit score with their rent payments. We have some companies in the membership that help Canadians invest their money and grow their wealth in a very transparent and simple way. I can follow up after this meeting with a short list of companies and the sorts of products they offer that get at what you're concerned with.
Great, I'd appreciate that. Mr. Chair, I'm going to give the rest of my time to Ms. Vanderbilt.
Yes, thank you very much. And I want to talk about something just a little bit different. I know that the Canadian Centre for Women's Empowerment has identified financial abuse as a means of coercive control and intimate partner violence. And often women looking to leave abusive situations, either their credit has been impacted because of the control that the spouse had over the finances, or in other cases, they don't have the credit. Is there anything that you, and I'm also looking at the other witness, are doing, because they're calling on financial institutions to be more aware of these kinds of situations, because often this is why women stay in those relationships, because they're not able to get out financially.
Those sorts of situations are tragic. I venture to say probably not enough is being done. I'm not aware of any particular ideas or services any companies offer to help women get out of those situations, but I'd be happy to set up some time and talk with you and learn more about what we can do to be allies.
Is Equifax still there? If I could ask the same question?
Yes, thank you. I'm so glad that you brought this up, because this is an issue that I personally am quite involved with, and Equifax in general is as well. We know that survivors of human trafficking often end up with a lot of what we call coerced debt, which in a lot of cases takes the form of a credit account that was open in the survivor's name that she never knew about, or one that she did know about, but was never, if it was a credit card, she never saw the card, she was never able to use it, and she comes out of this situation owing debt that really isn't hers. What we're seeing is a move towards including coerced debt as a recognized form of fraud. And the Ontario government has actually passed some legislation around that, which puts the onus on financial institutions to have a process, and one of the suggestions I've heard is to use a process similar to what the guidelines are around finding potential elder abuse. There are a lot of possible parallels there that a lot of those guidelines that have been established might be able to be used or modified slightly for this scenario. So thank you for raising this. This is something that we're having a number of conversations about.
Thank you very much. And obviously there are other implications of this as well, as you mentioned, elder abuse and others. So thank you so much for those recommendations.
Merci beaucoup. Monsieur Garon, la parole est à vous.
Merci, Monsieur le Président. Je vais continuer avec les fintech. Moi, je vais vous le dire franchement, je trouve que c'est un sujet qui est un sujet puis un marché qui est
a subject in the market. You indicated earlier in your notes, and I'll translate, that we needed to a certain level of structuring and regulation. And my experience has been with banks, and they come and appear before us as witnesses, and rather than bragging about the level of regulations that is very secure, consumers should feel safe and trust the system. When we ask them what other kind of regulations they would like, they don't want any, or they want fewer. They want voluntary code of ethics, code of practice. But there's never been one agreement, MasterCard, Visa, the government. The government have asked the controllers of MasterCard to reduce their rates. They offered the card supplier offered the minimum, and the government accepted that. But when we take a look at the exchange rates or the charges, Canada is within the global average, within. But if we take a look at who's asking for more, they ask a whole of a lot more than us. Everywhere else, Australia, New Zealand, Britain, even the Americans think that they have to modify and reduce interchange rates. Were we to regulate, to have a real rigorous, not a code of practice or code of ethics, which is voluntary. The federal government should do it now, don't you believe?
Look, I think the goal to reduce transaction costs for merchants is laudable. It's one of the premises of the association. That's why we want more competition in the space. I think the way to reduce fees is not by regulating them down. I think in a lot of these other jurisdictions, we've seen that the effects of interchange fee regulation hasn't been exactly what policymakers has intended. Interchange fee caps in the United States and Australia reduced the interchange fee revenue of the banks that issue the cards, which has resulted in those banks cross-subsidizing those losses by increasing fees in other areas. In the EU, though they couldn't find a systematic relationship between overall fees and the interchange fee regulation, they did find that when they looked at a very broad data set, some fees did go up as a result of interchange fee.
Donc, je comprends votre argument parce que vous n'avez pas.
Okay, I answered the question, but you've done like all sorts of bankers that appear. You really didn't answer. Interchange rates have been changed in other areas. Banks who were scamming their clients were brought to heel, but these credit cards continue to overcharge or scam their clients. Don't you think that would be? Do you think that fintech's policy is quite a winning solution?
I think a fintech. I don't think a winning solution is pro-fintech or pro-bank. It's pro-consumer, and what consumers need. What Canadians need right now is lower fees and more productivity. The financial sector right now, the way it's structured, is a drag on Canadian productivity, and it's a drag on affordability. Fees are high. if you're a small business, it's very hard to get access to a loan. And if you can access the loan, you're paying more for it than a lot of your peers in other jurisdictions. To a greater extent, you're also required to pledge personal collateral, like your house. The loans are very expensive. We can't grow this economy if we're not investing in our businesses. So, by making banks work harder for their customers, including by letting new fintech entrants into the system to put competitive pressure on banks, I think will generate better outcomes for consumers and merchants. If we go the other route and regulate interchange fees, I think we'll generate a bunch of unintended consequences like we've seen around the world.
Merci beaucoup, Monsieur Garon. Monsieur.
Thank you, Mr. Garon. Mr. Massé.
To Equifax, I just want to follow up with one of the issues I've raised as the treatment of Canadian consumers. In 2017, the Equifax breach of privacy. Can you tell us what Canadians, I think there was 19,000 Canadians that the Privacy Commissioner identified had their privacy breached through Equifax's negligence. What did those Canadian consumers receive?
That cybersecurity incident that occurred 7 years ago in 2017, as you pointed out, did affect approximately 19,000 Canadians. Those Canadians were offered assistance with credit monitoring in order to keep an eye on any potential evidence of their identities being used. In the 7 years since that incident occurred, Equifax has invested over $1.5 billion to rebuild our technology and security infrastructure. Today, there's little, if any, of our old security program that remains. It's been completely overhauled. And one of the things that, as an Equifax employee, I am most proud of, we believe that cybersecurity is not a trade secret. And our head of information security, a gentleman by the name of Jamil Farshi, he's been invited to be a strategic advisor to the FBI because of all of the positive work that has happened at Equifax. And we are very open with our competition and other players in the industry, believing that if we can be stronger together as a unit, then we're serving everybody's purposes. We do not need to be hiding from each other how we're protecting people's data.
The U.S. Federal Trade Commission included a $425 million settlement to citizens. We had to use a class action lawsuit over here because we don't have the same systems in place or protections for consumers. What did American citizens receive for the loss of their privacy, which was consistent with the Canadians and UK citizens?
Thanks for the question. I'll have to be going from memory a bit here as I don't have the specifics in front of me. I believe that the amount of money that was designated as part of that overall settlement was divided by the number of people who met the qualifications to be a part of that group. And so that resulted in certain amounts of money being transferred to impacted American consumers.
Appreciate you dealing with that because I think it's important for looking at the protection of consumers, especially if we need watchdogs or analysis from independent groups and organizations. But that's the challenge is also under the cybersecurity threats is ensuring that's done properly and so forth. And thank you for those answers. Thank you, Mr. Chair.
Merci, Monsieur Massé. Monsieur Généreux.
Merci, Monsieur le Président. Monsieur.
Thank you very much. Mr. Annis, you stated earlier that the government did not consult sufficiently as to the agreements with issuers, providers of credit cards, etc. What have been the repercussions of that non-consultation or poor consultation?
It's a great question. I do think they probably under-consulted. Like I said, we as an association were not consulted. We didn't have a chance to provide our perspective on how to best achieve the government's goals. I think the effect of this has been a policy that isn't achieving the results the government wanted to achieve. Like I said, you can't affect the overall price of something by micromanaging a tiny component of that price.
Essentiellement, ce que vous dites, c'est
Well, essentially, you're saying that the government did not consult sufficiently or adequately, and so, as I was saying to my colleague, Mr. Perkins, there's a small percentage of the costs that have been reduced, but others, like Stripe, we don't intend to, or they just haven't reduced their costs, because that's what the value of our service is. So there's been no real gains. The Prime Minister has just tweeted just a few moments ago that the government is quite proud because if you go get a coffee at Tim Hortons or somewhere else, the money should be provided to the merchant. So it's not quite consistent with what you've just said.
I didn't get a question in the translation.
Essentially, the PM had just said in one of his tweets that he was happy that his government had created this agreement with various partners so that the enterprises would getting more money when they sell a cup of coffee. But what you've said isn't exactly reflective of what is actually going to happen.
In some cases, in some cases, depending on the pricing the merchant chooses, there may not be a change in the price. So, yes, there are nuances here that might be missed in some of the more political communication around this.
Vous avez aussi dit que plusieurs autres.
You've also stated that in other countries or in other areas of the world, regulations are in existence that allow to have open service and be more effective, so to increase competition. Can you name some of these countries?
Okay, they have a real-time payment system and open banking. One of our members is a global fintech company. When the UK modernized this payment system and gave fintechs access to it, the moment they integrated into that system, they were able to cut their average cost of payment by 20%. That's just immediately upon connecting, and they were able to increase the movement of the speed of the movement of funds to seconds. It happened in real time, more or less. The cost of an open banking payment is also a fraction of the cost of a credit card transaction from the merchant's perspective. This is also something that exists in Europe. This is something that exists in Australia. Canada is one of the only advanced economies not to have made progress on these things yet.
Pourtant, le gouvernement a annoncé dans son budget.
But the budget did announce in a budget statement, either this year or last year, that they were going to create an environment to allow open banking in Canada. But do you think that the response has been adequate?
It wasn't too long ago when many in the sector thought it wasn't going to happen at all, despite all the consultation and the years and years of conversation. I think some of the excitement will be muted, though, because, as I said in my opening remarks, on day one, this will just allow Canadians to share their data. It won't allow Canadians to authorize someone else to initiate a payment on their behalf, either push the payment out or pull the money from one account into their own. That payment capability that is turned on in other jurisdictions like the United Kingdom, that would allow a merchant a way to encourage their customer to pay by something other than a credit card. So in addition to being able to surcharge, you'd be able to partner with a fintech and get money the way you want on the terms you want it. That in Canada is not going to be an option on day one. And it's not clear it'll be an option ever unless the scope of open banking is expanded.
Merci beaucoup, Monsieur Généreux.
Thank you, Mr. Généreux. Mr. Turnbull.
Thanks to all the witnesses for being here today. Ms. Kuzmich, sorry if I'm mispronouncing your name, but I have a couple questions for Equifax. So one of the questions that I had was about credit card delinquencies and the sort of trends that you've seen from the data that you collect. Could you sort of update us on what trends you see in terms of delinquencies, maybe over the last couple of years leading up to the first quarter of this year?
Yes, thank you for the question. I'd be happy to. When we look at these aggregate numbers across Canada and we speak in percentages about delinquent accounts, it's very easy to feel a separation from what these numbers actually represent. And I want to acknowledge that struggling to make payments and having to decide between buying food or paying rent is not a situation anyone wants to find themselves in. These numbers represent actual people across Canada who I believe are generally trying to do their best with what they have. I'll start by focusing on the numbers that Equifax released last month, reflecting the second quarter of this year. So in other words, we're looking at the time period of April, May, and June of 2024. I will also highlight that data science is an exact science with many nuances. For example, we'll look at two measures reflecting credit card use in Canada and how much of the balances that people have actually been paying off on their credit cards. So we'll start by taking a look at what we call the balance delinquency rate. This figure is derived by adding all the credit card balances amounts that were owed during the period. So in this case, the period is April, May, and June of this year. And then we look at how many of those dollars were overdue during that period. Overdue is defined as being 90 days late or worse than that. By that measure, 3.4% of the owed balances were delinquent during the second quarter of 2024. Looking at another measure called the trade volume delinquency rate, this is where we count the total number of active credit card accounts during the period, again, still the second quarter of this year, and how many of those credit card accounts were overdue. And again, that's 90 days past due or worse during the time period. According to the Equifax data, the total number of credit card accounts is somewhere in the neighborhood of about 52 million in Canada, and about 1.6% of them were delinquent during the second quarter of this year. So here's how this is a great example of how critical the nuances are. Is Equifax saying that the rate of overdue credit card payments in Q2 is 3.4% or 1.6%? The short answer is yes.
Yes, meaning both are true?
Yes.
Yeah, got it. So because you're using two different units of measure, I got that. And is that down or up from the previous quarter of 2023?
We have been seeing credit card balances and the amounts that people are carrying month to month. We have been seeing that increasing year over year.
That would be since the end of COVID-19 or during COVID-19 onward?
Even during COVID-19, there was a slight dip and then it started to increase, and we've seen that increase continue since then.
Okay, and can you add any demographic features to the understanding of debt and delinquencies? Do you have that information? Can you disaggregate some of that information by demographic for us and give us some understanding of who are more likely to be delinquent?
So in the second quarter of this year, we talked about how the average credit card balance per consumer continued to grow. but there was some evidence of a slowdown in consumer spending. So the increase in balances then is attributed to a reduction in credit card payment rates. In other words, many consumers are paying a smaller percentage of their balance owing than they previously may have done. We have seen that consumers under the age of 35 are seeing some of the fastest decline in card payment levels. So they appear to be amongst those who are less and less able to pay their balances in full. And we have seen the increase in card balances for consumers of all ages was more significant for mortgage holders. So for people who are carrying a mortgage, we saw the average credit card balance jump by almost 12% compared to the same period last year, whereas non-mortgage holders had an increase of about 7.7%. So what we glean from that is that mortgage holders were carrying balances month to month on their credit cards at a rate that is increasing faster than the balance increases for non-mortgage holders.
And would those predominantly be variable rate mortgage holders? Would you assume that, or do you have data on that?
We don't have data on that specifically, much like how the credit card interest rates are not reported in the standard reporting of data to Equifax. The same is true for the type of mortgage and mortgage interest rate.
So one more question, and then I'm sure the chair's going to cut me off here. But what are the trends that you're seeing in terms of the interest rate drops with the central bank interest rate drops? I know that those don't necessarily affect the cost of the interest on credit card debt, but they certainly impact consumers' ability to perhaps make minimum payments on their credit cards or service that particular debt, especially if they have variable rate mortgages where they're getting some relief right away with those central bank rate cuts and inflation coming down. Have you seen that having an impact in the data that you collect?
That's a very good question. Now, we have to remember that the data that is reported to credit bureaus is a bit of a lagging indicator because we're often just receiving the data for the month prior and the payment that was made the month prior. So it looks like we're seeing some early signs, but it's still a little bit too early to say definitively.
So perhaps next quarter? Perhaps next quarter we may... Yeah.
We're happy to share the data that we have.
Thank you very much.
Thank you, Mr. Patzer. We'll get back to you for 5 minutes.
To FinTech, in 2023, the Canadian Revenue Authority changed the definition of financial services to exclude credit card surcharge revenue, making these payments eligible for GST, HST. They weren't obviously eligible prior to this. This was done by creating a special exception in the Excise Tax Act. Because of this change, all credit card surcharges paid on or after March 29th, 2023 are now subject to GST and HST. Is that correct?
Yes.
Okay. On its website, Stripe said they wouldn't be passing along the savings from the Liberal announcement of their deal with Visa and MasterCard to lower fees for small businesses due to, quote, their credit card processing in Canada for businesses on standard pricing increasing by 0.036%, primarily due to the recent reintroduction of GST, HST taxes for certain for certain card network scheme fees. So that change on GST, HST eligibility would probably have significantly eaten into Stripe's profits, right?
I can't speak to how profitable or not Stripe is, but in general, when you slap a tax on something, you're going to increase the cost of it.
For sure. It's possible that Stripe, or is it possible that Stripe isn't passing along the savings from the government's deal with Visa and MasterCard to lower fees to small businesses to offset the change in this GST, HST eligibility? Do you think that's possible?
I couldn't possibly comment on that. It might be.
Maybe.
Not.
Probably. Why, I can't see why not. So essentially what's happened here is that the government changed the definition of financial services to exclude credit card surcharge revenue, making these payments eligible for GST, HST, then turned around and made the deal with Visa and MasterCard to lower fees for small businesses, but those savings were really went to offset Stripe's loss in profit due to the tax change. Seems reasonable to conclude that, right? Wouldn't it?
It might.
For small businesses that use Stripe, the deal with Visa and MasterCard to lower fees for small businesses is actually just a fake announcement. It went to offset Stripe's tax burden. I think that's basically what we're kind of getting from this meeting here today. And small businesses can just pass that burden on to the customers, right? I mean, if the payment company is absorbing those costs, forcing the small businesses to have to pay them, then they can then download that onto the consumer, right?
It's possible. How costs are passed along in this complicated chain depends on so many different things and which parties we're talking about. But in theory, someone has to pay the price of that tax.
Yeah. Someone's got to pay it in the end, and it's always the consumer always loses is generally how this works. Stripe made $16 billion in profit last year and processed a global payment volume of $1 trillion. Why do you think the government didn't force them to pass the savings from their deal with Visa and MasterCard along to small businesses?
I don't know why they didn't force the processors to pass along the cost. They probably did everything they could to do it. But I think any policymaker that looks at this market, their first reaction is going to be, wow, this is really complicated. We can't just go in and tell companies what prices to set and not expect any unintended consequences. The market for payments is multi-sided. You can't affect prices here without also affecting prices over here. You can't give merchants a break without costing consumers more. You can't give consumers a break without costing merchants more. The government has probably realized that this is a game of redistribution. We can't make everyone win here. And this is why the history of credit card policy in this country, to me, seems like that famous definition of insanity, where we do the same thing over and over again and expect a different result. We've been through many voluntary agreements, probably because we've realized we can't regulate, we can't make everyone happy. So, our perspective as an association is let's stop the madness and focus on actually promoting competition and innovation in this space, because that's what's going to drive down costs for businesses and consumers.
So you think that there should be more competition in the space, correct? Is that what you're saying? Okay, because to me it's like, why would the government have to get involved in this space in the first place, right? Why are the payment companies not just lowering these rates on their own anyway? Why wouldn't they just do it on their own?
So in some spots they are, not in every spot though. The Competition Bureau's market study on this in 2017 concluded that when it comes to payment processing in the credit card market, competition is fairly strong. It's probably still fairly strong today. Just for kicks, I went on Shopify's website and looked at all the different payment processors they have integrations with. There were way too many to count. The market has also started competing along non-price-based margins. So they don't only say, I can give you a better deal. They say, I can also do your inventory management. I can do your reconciliation. I can handle your fraud. They're competing quite viciously with each other for market share. Where we don't see competition is when it comes to some other payment systems that could be used as a way to compete with credit cards. In particular, our national payment systems, that real-time rail that everyone keeps talking about. Access to that thing has been restricted and controlled by the biggest banks in the country, who happen to make a lot of money from credit cards. So I think in this country we have a governance problem in the payment system, and nothing the government is doing right now is addressing that. And I think that is actually what the problem is.
Yeah, because like when I look at, I pulled some small businesses in my home community over this last week, talking to them about some of the fees that they paid in regards to Visa, MasterCard, Interac. Now, small sample, but basically when I factored out across the city of Swift Current, for example, 18,000 people, there was a couple hundred businesses in our town, very entrepreneurial city. Over a year, we're probably looking at close to $500,000 leaving the local economy just in fees alone, and that was just only on one aspect of fees. When you add all the other fees that are baked in there, we're probably over $1 million in fees leaving the local economy going to payment tech. Do you think that's reasonable?
I think overall, the cost of sending payments in this country and receiving them is probably higher than it needs to be. EY released a report a few years ago that estimated overall, like when we look across all the different payment instruments, the cost of sending and receiving money costs Canadian businesses $14 to $32 billion every 5 years. That's a non-trivial portion of GDP, and there's a lot more we can do to bring that down.
Thank you very much, MP Patzer. Just, you said 14 to 32 billion every 5 years? That's correct. Okay. Thank you, Monsieur Gall.
Thank you, Chair. Well, allow me first of all to welcome Ms. Yu, our latest witness. I found your opening remarks quite interesting, particularly when you mentioned that people are in very precarious situations and they keep moving from one card to another and then sometimes is to pay off another credit card. Well, this becomes a real vicious cycle. But when we take a look at recent data, we can see that Canadians are really hooked on credit. They use it a lot, and as a percentage of disposable income, other than the mortgage, has higher indebtedness rates than Americans, for example. How do you interpret that situation? Is that a cultural thing? We have a financial industry that's telling us that it's difficult to access the systems, that we should have more access. And we have people here in Canada, the most highly indebted in the OECD. How do we explain that?
For your question. I think you're absolutely right. There is a lot of people accessing credit cards as a form, which is having debt. It's more accessible than, for example, a line of credit, which might take the income, assets into consideration before they can borrow. And it's usually at a much lower rate. Meanwhile, credit cards are being marketed in the experience of our participants at post-secondaries, at grocery stores, at malls. It is no credit check or one credit check, and you're automatically eligible for $500 credit limit or $1,000 as well. Our participants get general mail that said they're pre-qualified for a credit card. All they have to do is sign their name, and they would sign their name and receive a credit card. So it is highly accessible to access credit cards and their debts. I hope that answers the question.
Je vais vous poser, suite à ce que vous venez de nous dire,
Okay, following that, I have another question. It might sound a little direct, but are you of the view that certain companies who offer credit cards have predatory behavior towards people who have perhaps lower literacy rates and are particularly vulnerable to this kind of indebtedness? So they really don't figure out exactly how the game works.
For the question and the observation, and in my experience in working with participants living on lower incomes, absolutely. Plain language is not something that is used. Maybe the customer sales rep has a quota to meet and will tell the participants at the mall, at school, at the grocery store, hey, if you sign up for this, you can have a grocery gift card of $250. All you have to do is put your name and you'll get automatically a card. So today's groceries are for free. And our participants would take what they say at face value. The terms and conditions, I don't know about you, but for myself, are quite lengthy. I scroll through it and I just put a check mark and say, yes, I consent and agree. I honestly do not read through all of that. And in my observation of our participants, also do not read through that. So having a discretion that's plain language of, hey, if you sign up for this debt, it means you make minimum payments in 23 years, you'll pay it off. So something that will help them draw a conclusion can be quite helpful.
Okay, merci beaucoup, Monsieur Garon.
Thank you, Mr. Garon. Returning.
This last round after MP Patzer, and then we'll go back to you, Mr. Massey. MP Aria.
Thank you, Mr. Chair. Mr. Chair, I request Equifax Canada can send us their updated report on the delinquencies, the credit card balances, etc., as and when it becomes available. I have a question for Fintechs Canada. The real-time payment system usage of it will reduce the usage of credit cards, right?
It could, and people had high hopes it would in the early days, but we feel that the big banks that control the organization that's meant to deliver this system have pared back the scope so aggressively that this thing will amount to what insiders joke is a dumb pipe, if I can use the crude language.
And you mentioned you don't want government to micromanage, you want more competition. I agree. But at the same time, you come and say that, real-time payment system, I think your organization wrote an article that real-time payment system should be built in timely manner, and you want federal government to take action. Tell me what is that the government is doing that is preventing from the system being developed. This is being developed by Payments Canada, whose members are all the financial institutions. I believe now the insurance companies are also the members there. Why do you blame the government for that?
It's pretty simple. The government created Payments Canada and said, on the one hand, you have this public interest mandate, but on the other hand, the biggest FIs in this country are going to fund you. They've created this irreconcilable tension and said to go off and do this. They've really created what is, from the outside looking in, a dysfunctional
what has the U.S.
organization.
done then under Fed now?
In the U.S., the central bank has just come in and said, we're going to build this thing and you better
here
connect
also
to it.
the Bank of Canada is a member there.
The central bank, in theory, there's nothing stopping the government from giving our central bank the mandate to do something like what we have seen in the U.S. I think at this point, it's the continued reliance on this broken governance model that's slowing down and ultimately damaging the promise of this real-time rail.
And again, second thing that almost every witnesses who come before the committee says that the government has to fund that, fund this. You're saying, I think when you're asking for the government more funding, at least the article your organization wrote, that 52% of Canadians, they don't know about they are not comfortable with open banking, and about 9% of Canadians, they are aware of open banking, and you want the government to fund for the education of this. The financial industry, financial institution, and the entire financial industries are making billions of dollars in profit. Can't the institution fund a bit of education for the consumers?
I think the industry certainly can. I mean, one of the reasons we endorsed the Financial Consumer Agency of Canada to be the regulator of open banking is because it's largely funded on a cost recovery basis. It does receive a small sum from the government for the purposes of education. We just asked for more money to be allocated for the purposes of open banking education.
Again, more money. I have a question for Ms. Margaret Yu of Momentum. Ms. Yu, government has taken steps to curb predatory lending under the high-interest loan space. What do you think the government should do? What regulatory steps you think a government can do within the credit card industry?
Thank you so much for the question. Yes, we're absolutely pleased that the government has made the announcement to lower the criminal interest rate to 35% annual percentage rate, APR. I think the next steps is proposal to improve enforcement of the criminal rate of interest, which can be a very promising step for Canadians. In our experience, there are Calgarians that have taken credit cards that are higher than 35% annual percentage rate. One participant has taken a credit card at 36% APR that we know of.
Now, is there specific steps you have in mind or suggest to the government? Either you can give it now or you can give in writing to the committee later at a later date?
We can.
Oh, thank you.
Thank you.
My last question, I guess, is to Equifax Canada. Ms. Kuzmic, you did come with the interesting statistics on the delinquencies, the credit card balances, etc. When you look over a period of last 5 years or 10 years, what is the trend? Is it going in one direction? Do you see the ups and downs? Any comment on the trend, please?
Thanks for that question. The trend is generally increasing in terms of both credit card usage, credit card balances, number of credit card accounts which exist. It is also important, though, to remember that there is a population component that contributes to that trend. So, for example, last year we had very high levels of immigration of newcomers to Canada, many of whom would be starting credit card accounts. So generally, I would say, yes, we do see increases in all of those figures.
Now, real-time payment system, when it comes into effect, where do you think, will it have any effect on the usage of credit card?
I can appreciate that question. I don't have any data to be able to answer that effectively, I'm afraid.
Thank you.
Thank you very much. Monsieur Massé, la parole est à vous.
To Ms. Yu, I want to thank you for your practical suggestions on some of these things. One of the things coming to light now, and it's funny, you can always remember all these things, is that if the government, like a good example of this is the motivation of the government. We see Rogers right now that's increasing its costs for boxes for consumers. It's a story that's out there right now. But what's not really talked about in the story as much is that the government has almost no motivation to intervene on this because they're going to get all the HST revenue from this. It's actually clearly identified actually on the bill when they actually increase it, is that the HST will be applied and then collected by the government. And so even if we get these merchant fees reversed, if there's going to be new taxes on the HST, which appears to be the case, and it's something I forgot about, I think I mentioned at one point that would make Bernie Madoff blush with regards to a Ponzi scheme on how to deal with this. What's the point of all of this if we don't pass on any of the consumer savings that we're trying to get to? I'd like you to speak to that about how important that is. If it just turns out to be a way to increase the revenue for the government, is that not defeating some of the purposes? What we want to have is that the consumer doesn't first have to pay for regressive taxes on these things or regressive fees. Did we lose her?
Hi, thank you so much for the remark. I was processing your question. I'm not sure how to answer that, to be honest. I'm so sorry.
At the end of the day, consumers to get the benefit at the front end of it than a government program later on from the accumulation of HST from those services are, I think, the relief we want in the forefront, not the back end of a promise maybe on another program later on.
Yeah, if consumers can see the cost benefits and savings on the front end would be most ideal.
Thank you.
Thank you.
Thank you very much. And I'll now turn it over to MP Perkins.
Thank you. Thank you, Mr. Chair. I just want to follow up a bit on my colleague, Mr. Patzer's questions, just to make sure everyone's clear on this thing. So the Liberal Minister of Revenue in 2023 changes the rules and allows the credit card processing fees now to be included in the GST, HST charges where they weren't before, correct? That's what you confirmed. And this happened about the same time. I think that the announcement was made in May 2023 that by the Minister of Finance that we would have this miraculous reduction in credit card payment processing fees for small business. Both happened at the same time. And I accept what you said, absolutely. Somebody's got to pay. This is a service. It's being offered. And the question is, where does it get charged? How does it flow through? And as part of that change, small businesses were allowed to do something they weren't allowed to do before, which is to pass that fee on to consumers on the transaction, and the GST and HST could be paid on that. Do you have any idea what the estimate was that that new revenue source would present to the federal government in HST revenue?
I do not.
Okay, well, there are estimates from accounting firms that it's about $160 million. So this change seems to benefit the government, and that'll grow, obviously, as transactions grow, as value grows, that HST component that the government gets will grow. That's the beauty of the GST for the government, is that it grows as the economy grows. So as those transactions grow, that number of 160 million will grow. So that change gets made. And then what we have is we have a situation that says, oh, well, we're going to do this announcement that says we're going to lower credit card fees, or the processing fees for credit cards. And a lot of your members aren't agreeing to pass it on. Doesn't seem clear that anyone will pass it on. Is that correct? Except for the ones that have already committed to the government, which are about 4 or 5 companies, which aren't all, or most of them aren't your members.
I can't speak on who's decided to pass it on and who hasn't, because I'm not entirely sure myself at this point.
Well,